While flashy investments like stocks and crypto get all the attention, farmland quietly produces steady profits year after year, making landowners millions without making a lot of noise. The beauty of farmland is that it's always in demand. No matter what happens in the economy, people still need to eat. Crops keep growing, farmers keep producing, and landowners keep getting paid. Unlike other investments that can lose value overnight, farmland tends to increase in price over time while also generating passive income through rent and crop sales. Here's how it works. Investors buy land and lease it to farmers who grow crops or raise livestock. The farmers do the work and the landowner collects rent. Just like owning a rental property, but instead of tenants, you have farmers who depend on the land to make a living. Some landowners even partner with agricultural companies or grow high-value crops like almonds, avocados, or grapes for wineries, which can bring in even bigger profits. The best part? You don't have to be a farmer to make money from farmland. Many investors buy agricultural land and let professionals handle the farming. Others invest through farmland investment funds, which allow people to own a piece of income-producing land without dealing with the day-to-day operations. Farmland isn't just a great way to earn passive income, it's also an incredible long-term investment. As the population grows and the demand for food increases, farmland becomes even more valuable. That's why wealthy families and billionaires quietly invest in it. They know that no matter what happens in the stock market, farmland will keep producing wealth for generations to come. 6. Precious metals. When the economy gets shaky, billionaires don't panic. They protect their money with gold and silver. These precious metals have been used as a store of value for thousands of years, and unlike paper money, they never lose their worth completely. That's why the rich always keep a portion of their wealth in gold and silver, because no matter what happens, these metals hold their value when everything else crashes. Think about it. Stocks can drop overnight, real estate markets can crash, and inflation can make your cash worth less every year. But gold? It has been valuable since ancient times, and it's still just as valuable today. That's why central banks, hedge funds, and billionaires stock up on gold whenever the economy looks unstable. It's like financial insurance, a safety net that keeps your wealth protected. Silver is just as important. While gold is known as a safe haven asset, silver has the bonus of being used in industries like tech and solar energy, which means demand for it is always growing. Plus, silver is more affordable than gold, making it a great option for everyday investors looking to diversify their wealth. Investing in precious metals is simple. You can buy physical gold and silver coins or bars and store them yourself, or invest in gold and silver ETFs if you don't want to deal with storage. Some investors even buy shares of gold mining companies, which can offer even bigger returns when metal prices rise. At the end of the day, gold and silver aren't about making quick money. They're about preserving what you already have. That's why billionaires and smart investors keep a portion of their wealth in precious metals. Because when the economy gets rough, gold and silver never go out of style. 7. Timberland and natural resources. Most people don't realize it, but owning trees can make you rich. Timberland, land covered in forests used for harvesting wood, has quietly been one of the best performing assets for centuries. In fact, over the long run, timberland has outpaced stocks in terms of returns, all while being far less risky. The best part? Trees grow on their own, making this one of the most passive investments out there. Here's how it works. Investors buy land filled with trees, let them grow, and then sell the timber for profit. The demand for wood never goes away. It's used in construction, furniture, paper, and even high-tech industries. While stocks go up and down daily, trees keep growing, making them more valuable every year. Even during economic downturns, timberland holds its value because people will always need wood. And it's not just about timber. Land with other natural resources like freshwater springs, mineral deposits, or even wind and solar energy potential can be incredibly valuable. Companies lease these lands for mining, drilling, or renewable energy projects, turning raw land into a steady cash flow machine. For investors, timberland is a safe, long-term play. If wood prices are low, you can simply wait because trees don't stop growing. This unique feature makes timberland one of the few investments that appreciates over time no matter what. That's why billionaires, pension funds, and smart investors quietly buy up forest land. It's a low-risk, high-reward asset that keeps growing, literally. And if history has shown us anything, it's that owning natural resources is one of the smartest ways to build long-term, generational wealth. 8. Fine art and collectibles. Most people see art as something to admire, but the wealthy see it as a powerful investment. For centuries, rich families have been buying and holding rare paintings, sculptures, and collectibles, not just because they look good, but because they increase in value over time. Unlike stocks that can crash overnight, a Picasso or a rare vintage watch only gets more valuable as the years go by. Here's why. The supply of fine art and rare collectibles is limited. Once a masterpiece is created, that's it. There's no way to make more of it. As time passes and demand grows, the value of these rare items skyrockets. That's why billionaires and elite investors quietly build collections of art, watches, classic cars, and even rare sneakers, because these assets don't just hold value, they appreciate massively. And it's not just for the ultra-rich. These days, anyone can invest in art through fractional ownership, where you own a share of a valuable piece, just like owning stock in a company. There are also markets for high-end collectibles, where rare trading cards, coins, and luxury handbags sell for millions. The key is knowing what will hold value over time. It's not about buying any painting or collectible. It's about investing in things with proven historical demand. Just like stocks, some pieces go up in value while others fade away. But when chosen wisely, fine art and collectibles can build serious wealth, passed down for generations. 9. Cryptocurrency and blockchain assets. A decade ago, most people laughed at the idea of digital money, but today cryptocurrency has turned early believers into billionaires. Unlike traditional assets, crypto isn't tied to any government or bank. It's decentralized, meaning no one controls it. And that's exactly why it's so powerful. Bitcoin, Ethereum, and other blockchain-based assets have exploded in value because they offer something completely different. A way to store and transfer money without middlemen, paperwork, or restrictions. And while the market has its ups and downs, the overall trend is clear. Crypto is here to stay. But it's not just about coins. Blockchain technology is powering NFTs, decentralized finance, ENR DeFi, and tokenized assets, creating entirely new ways to invest. People are buying digital art, virtual real estate, and even earning passive income through staking and yield farming. The financial world is changing fast, and those who understand it early are positioning themselves for massive gains. Of course, crypto is still a high-risk, high-reward game. It's not for the faint of heart, and it's important to do your research before diving in. But one thing's for sure, crypto and blockchain are reshaping the way wealth is built, and those who get in at the right time could be setting up their families for generational riches. 10th, intellectual property. Imagine getting paid over and over again for something you created years ago. That's the power of intellectual property. Owning ideas that keep making money long after the work is done. Musicians, authors, inventors, and even businesses use patents, trademarks, and royalties to turn creativity into cash machines. Think about a hit song. Every time it's played on the radio, streamed online, or used in a commercial, the artist gets paid. That's called a royalty, and it's why some musicians earn millions long after they stop making music. The same goes for books. Authors get paid every time someone buys their work, sometimes for decades. Then there are patents which protect inventions. If you invent something valuable, whether it's a new gadget or groundbreaking technology, you can license it to companies and get paid without ever producing it yourself. Some of the biggest businesses in the world survive on patents alone, collecting millions in licensing fees every year. And let's not forget trademarks. Ever wonder why companies protect their logos and brand names so aggressively? Because a strong brand can be worth billions. Businesses license their names to other companies, creating a steady flow of income just for owning the rights to a recognizable name or design. The best part? Intellectual property is one of the few assets that can generate passive income forever. Once it's created and legally protected, it can keep earning for generations, making it one of the smartest ways to build long-term wealth. 11th, high-yield bonds and treasury securities. Most people don't realize it, but the rich make money even when they're not taking risks. One of their favorite strategies? Lending money to the government and big corporations, and getting paid in return. This is done through high-yield bonds and treasury securities, which are basically IOUs that pay interest over time. Here's how it works. When the government or a company needs funding, they issue bonds, and investors who buy them get guaranteed interest payments. It's one of the safest ways to grow money because you're not relying on the stock market's ups and downs. Treasury securities, for example, are backed by the government, making them one of the most risk-free investments available. That's why billionaires, pension funds, and even banks store billions in bonds. They know the money is safe and keeps growing. Then there are high-yield bonds, which work the same way, but offer bigger returns.